all of this stuff is lagged. So the Fed operate in that lags. Stuff like crypto and tech stocks are trading on liquidity and future liquidity. So financial conditions, they eased a long time ago. So people looking at the Fed saying, well, when the Fed raise or when the Fed cut, that's not relevant. What's actually relevant is what the kind of financial conditions are doing. But I think there's two inflations. One is the inflation versus your income, which is what we saw last year. Asset inflation is different. Your future self is poorer, tying up your capital in something with an expected return. So in a future date, you're hoping to be wealthier.
Wait a minute, everyone. Get ready for the ultimate crypto investing website, the Bitcoin Seller. It's your golden ticket to an exclusive insiders club. Expert predictions, on-chain data, and breaking news, all for you. Imagine all crypto insights landing in your inbox daily, like having your own expert team. Don't miss this VIP opportunity. Click the link and secure your spot. Join now and ride the crypto roller coaster with the Bitcoin Seller. Raoul's got some mind-blowing insights that are going to flip your understanding of finance. Forget the usual talk about interest rates. Raoul explains what really moves the financial world. It's a dance between money flow, crypto, and tech stocks. Sip your coffee as we explore the world of two inflations. One about stuff getting expensive, and the other about how much cash we've got in our pockets. Raoul breaks down the chaos that happened last year when the cost of things shot up faster than our incomes. Curious? Grab your coffee as we keep chatting with Raoul Pal.
All of this stuff is lagged. So the Fed operate in that lags. Stuff like crypto and tech stocks are trading on liquidity and future liquidity. So financial conditions, they eased a long time ago. So people looking at the Fed saying, well, when the Fed raise or when the Fed cut, that's not relevant. What's actually relevant is what the kind of financial conditions are doing, which have been loosening massively, and liquidity has been rising. Whether you use Fed net liquidity or broader measures or M2, they're all rising on a global basis. And the global basis is another key thing most people miss because they kind of look at the US only. But, you know, if we look at this cycle, who's got the biggest economic problems right now is China. So they probably have the biggest bazooka to fire to try and get their economy going. Then it's probably the Europeans, then the US. You know, it feels that way. But we've seen liquidity. You know, I managed to catch the bottom in crypto and tech last year because of liquidity had bottomed. And the moment it bottomed, ETH bottomed first, and then the whole space bottomed, including tech, in October. And it's just been following that liquidity cycle ever since. And using my forward-looking projections based around this everything code thesis, you know, it should continue all the way into 2025. And crypto should continue to price that. The everything code is a thesis that I put together after 30 years of work where it came randomly. We kind of all know the world's broken. There's all the debt and the demographics and stuff you and I have talked about many times. I started looking at the ISM, the business cycle, so the Institute of Supply Managers Survey, and it was like fucking clockwork every 4 years. And that kind of stopped me in my tracks, like, this didn't exist beforehand. And then I realized that what had happened in 2008 was a debt jubilee, where every central bank said, we'll cut rates to zero, so you don't need to pay the interest. Think of it in those terms, because there was too much debt. So every government around the world resets their debt to 3 to 5 year sector. And that leads to this 4-year cycle, which is the same as the presidential cycle, and it's the same as the halving cycle, because Bitcoin was born out of that, right? So everything is now perfectly cyclical. And that won't change until we solve the debt problem. And once you understand that, you can then forward look where liquidity is going to go. Because if we're repeating the same cycle, you just use the old cycle, map it forwards for ISM, and it gives you a forward look on assets. And if that's the case, then it's a real code. Now, what I found within this was that the use of the balance sheet by all of the central banks was just for one thing: to pay the interest on the debt of the previous cycle. So they are just debasing the currency in the purest, simplest form, which is why we all make so much money out of crypto, because it does the best, because it's got technological adoption and it's a scarce asset. So it does phenomenally well when they debase. So liquidity comes in, that's great. Debasing the currency is super great. And so we've now got, coming forwards, if we look forwards, we've now got all the COVID interest payments to make. You cannot do them at 5.5%. We saw that before. The bond market freaked out. There's no way you can finance it without all the debt payments going exponential. So the Fed has to bring rates down, and it's going to end up on the central bank balance sheet, as it always does, because there's no other way. Because if you think about how the world works, is GDP growth, trend GDP growth in the US is 1.75%. The government's 100% of GDP in debt. It's actually more, but easy maths. If interest rates are 5%, that's 5% of GDP that needs to pay the interest. But growth is only growing at 1.75, so you'd have negative growth. Oh, but the private sector is another 100 and something percent of GDP in debt. So they're competing for the same GDP to pay the interest. So something has to give, and what gives is the government side ends up on the balance sheet. So this was all this big thesis I found from the Everything Code that made everything explainable. Why asset prices rise? Why is it becoming predictable? Why have we got these cycles? And what's really going on, which is the debasement. And debasement, to think about, they're doing it about 15% a year on average. So they could have either raised taxes by 15% to get the payments, which is politically unacceptable in an age like now. So instead, they just flip the coins and debase the currency, and people don't really notice. They just notice that the rich get richer because they can afford scarce assets, and the poor get left behind, which is creating this huge political divide as well.
Raoul keeps it real about the things that shape crypto and tech stocks. Say goodbye to the old school indicators. Raoul is all about liquidity and what's happening in the future. And guess what? We're not just sticking to the US. Raoul takes us on a world tour, checking out the money troubles in places like China and Europe. Picture Raoul as our crypto captain, navigating the seas and showing us the secret patterns that pushed crypto and tech stocks to the max in October. Get ready for the Everything Code theory. It's Raoul's way of decoding patterns and giving us a sneak peek into the future of crypto until 2025. Join Raoul as we decode the jargon of central bank balance sheets and how they mess with our money.
I think there's two inflations, and each person has a different inflation. Your inflation rate is different than mine. But I think there's two inflations. One is the inflation versus your income, which is what we saw last year. So the cost of goods rises faster than your income, so you have less discretionary spending power, right? That's what caused the economic slowdown. That was the shit show that happened in 2021, 2022. Asset inflation is different. Your future self is poorer. What an asset is a way of tying up your capital in something with an expected return, so in a future date, you're hoping to be wealthier. The issue is there, so with this regular inflation, which I don't think is sticky, I think it falls back again. Doesn't mean the prices don't come down, the prices come down, but the rate of inflation comes down. This asset inflation is more pernicious, and it's the thing that people don't understand. You know, if you go and speak to your parents and say, how many times your income would it cost to buy a house when they were in their mid-30s, they would say 3 times, 4 times. You ask a 35-year-old now, how many times your income would buy a house? It's like 10, 12, 14, 15 times, right? So their future selves are poorer because they can't buy that house. I think that is more destructive over the long run. They're both destructive, but this is bad.
As we hit the climax of this financial symphony, Raoul Pal reveals the two faces of inflation. Get ready for a world where inflation isn't a one-size-fits-all thing. It's got two different vibes. Raoul breaks it down. One kind of inflation messes with what we can buy, and the other quietly messes with our future prosperity, making it tough for younger folks to own property. This isn't just finance talk. It's an exciting journey into understanding how our money world works. Raoul wants you to join him in figuring out the long-term effects of these inflations, making tricky financial stuff easy for everyone. Get ready for a deep dive that'll give you a fresh perspective on the money game. And do not forget to subscribe to BitcoinZella. The most important news will reach your inbox on a daily basis and for free. Not know why you haven't subscribed yet. If you enjoyed the video, Hit that like button and subscribe for more daily updates. Remember, knowledge is power, and we're here to help you on your money journey. Until next time, happy investing.